Welcome to the LP Financial Services Forex Trading class, Introduction to Forex Trading videos. In Lesson 1, Origins of the Foreign Exchange Market, we see that the origin of Forex trading traces its history centuries ago. Different currencies and the need to exchange them had existed since the Babylonians. They are also credited with the first use of paper notes and receipts. Speculation hardly ever happened, and certainly the enormous speculative activity in the market today would have been frowned upon. In those days, the value of goods were expressed in terms of other goods, also known as the barter system. The obvious limitations of such a system encouraged establishing more generally accepted mediums of exchange. It was important that a common base of value could be established. In some economies, items such as teeth, feathers, even stones served this purpose, but soon various metals, in particular gold and silver, established themselves as an accepted means of payment as well as a reliable storage of value. Coins were initially minted from the preferred metal, and in stable political regimes, the introduction of a paper form of governmental IOU during the Middle Ages also gained acceptance. Before the First World War, most central banks supported their currencies with convertibility to gold. However, the gold exchange standard had its weaknesses of boom and bust patterns. As an economy strengthened, it would import a great deal from out of the country until it ran down its gold reserves required to support its money. As a result, the money supply would diminish, interest rates would escalate, and economic activity would slow to the point of recession. Ultimately, prices of commodities would hit bottom, appearing attractive to other nations who would sprint into a buying fury that injected the economy with gold until it increased its money supply, driving down interest rates and restoring wealth into the economy. The combination of a greater supply of paper money without the gold to cover it led to devastating inflation and resulting political instability. The Great Depression and the removal of the gold standard in 1931 created a serious lull in Forex market activity. From 1931 until 1973, the Forex market went through a series of changes. These changes greatly affected the global economies at the time, and speculation in the Forex markets during these times was very little. Near the end of World War II, the Bretton Woods Agreement was reached on the initiative of the USA in 1944. The conference held in Bretton Woods, New Hampshire, rejected John Maynard Keynes' suggestion for a new world reserve currency in favor of a system built on the US dollar. International institutions such as the IMF, the World Bank, and GATT were created in the same period, as the emerging victors of World War II searched for a way to avoid the destabilizing monetary crisis leading to the war. The Bretton Woods Agreement resulted in a system of fixed exchange rates that reinstated the gold standard partly, fixing the US dollar at $35 per ounce of gold and fixing the other main currencies to the dollar, which was initially intended to be on a permanent basis. The Bretton Woods system came under increasing pressure as national economies moved in different directions during the 1960s. A number of realignments held the system alive for a long time, but eventually Bretton Woods collapsed in the early 1970s following President Nixon's suspension of the gold convertibility in 1971. The dollar was no longer suited to be the sole international currency at a time when it was under severe pressure from increasing U.S. budget and trade deficits. The European Economic Community introduced a new system of fixed exchange rates in 1979, the European Monetary System. The quest continued in Europe for currency stability with the 1991 signing of the Maastricht Treaty. This was to not only fix exchange rates, but also to actually replace many of them with the euro in 2002. The Forex market initially worked under the direction of central banks and the governmental institutions, but later on it accommodated all of the various institutions, and at present it also includes speculators through the World Wide Web. The size of the Forex market now dwarfs any other investment market. The foreign exchange market is now the largest financial market in the world. This will conclude Lesson 1, Origins of the Foreign Exchange Market. In our next video, Lesson 2, we will compare the foreign exchange market versus other markets.